revenue solves all problems in business. So if you can figure out the revenue component, all the other operational issues, things like that you have can be solved by that.
Welcome back to the Mark Faris Experience. I'm your host, Mark Faris. Today we are interviewing Jack Bernstein. He is the founder of Bernstone Capital. He has a staff of 3. And so he's a commercial broker, he's a coach, and he is also we'll say, a syndication expert as well. He helps raise capital for some of these larger deals. And he built a big portfolio, 14 million, multi-million dollar portfolio in real estate, all from scratch as well. And he has some really cool ideas on how he's structuring and putting these deals together. Really excited to jump on and find out a little bit more about Jack. Jack, welcome to the call.
Thanks so much, Mark. Long time fan of the podcast. I appreciate you having me on.
Well, you have a really creative background. We were talking a little bit about how you're structuring deals and creating, we'll say, opportunity that that most investors just wouldn't see by going online and looking at deals. But before we jump into more of the portfolio and structuring deals and whatnot, why don't you share a little bit more about your background and what actually got you into real estate?
Yeah, so it's been let's call it an interesting life so far. So started off completely outside of real estate. I was actually an aspiring professional snowboarder for a long time. My coach was a national team coach of Canada and did the whole Olympics push and was traveling out around the world, from the age of kind of 13 to about 19 there, competing and sponsored by, people like DC Shoes and, Monster Energy Drink and some other people like that. And I'd always been a very entrepreneurial person in the sense, I always like to say that I'm a bad employee, but not for the reasons that I'm actually bad. I just feel like I want to own my own time.
Mm.
And lo and behold, with that, when I was chasing the Olympic dream when I was 19, I actually ended up breaking my back. And it forced me to move home from Whistler. And during that time frame, I ended up stumbling upon an idea of an electronics manufacturing company to make portable cell phone charging stations that had digital screens in it and advertisement and things like that, that you can put in bars, restaurants, and nightclubs, and whatnot, around the world. And that little idea ended up sparking a 4 or 5 year journey for me, where we ended up building the business to about 12 employees and, raising 3 rounds of capital for it, where eventually I divested of the business after 4 or 5 years, to my, some of the partners in the business as well. And I just remember being super lost. I was 22 or 23. I'd been working at this business for, 4, almost 5 years. And one of my investors who was on my board just came and got coffee with me one day. And he said, "What part of the business did you enjoy the most?" And I really thought about it. And I enjoyed talking to people. I enjoyed the presentation, the sales side. So he said, "You know what? Why don't you come work for me?" And he actually had a high tech company in downtown Toronto where he had raised a bit of money for. It's just around 100 to 150 employees. And I learned that I love tech sales when I went and worked there, but living in Oakville, Ontario, I hated the commute. So the 2.5, 3 hours a day just wasn't for me. And I wanted to look for something that bridged the gap between entrepreneurship and also being in a corporate environment. And I ended up getting an opportunity in another enterprise software company called ADP, which a lot of people have heard of. It's a Fortune 100 company. And their work schedule was 1 day in office. And this was way before COVID and all the rest of it. But the interesting part about the whole thing was the guys that I was working with were about 20 to 25 years older than me on average. And what they were doing was they were living off their base salary, relatively frugally, and responsible with their money. And they were taking all their commissions and then buying residential real estate with it. So they were buying duplexes, triplexes, student rentals, and things like that. And it got to the point where they were making almost as much money on the rental side from doing this, for 15, 20 years than they were doing on the active income side. And I saw the lifestyle that it allowed them to live, but most importantly, the chip they got to take off their shoulder of being able to provide for their family and working because they want to, not because they have to. And for me, growing up in a poor family, that was always something that was super important to me. And that's where I started to dip my toes into real estate.
That's quite the journey. Uh, that's phenomenal. You're going for the Olympics, you break your back. Most people like, and I can relate to that in a way. I was going and playing hockey. I played a couple of seasons over in Sweden, and then I was signed a contract down in the Central League. And after 6 weeks, I walked in and they called me in and said, "Hey, Mark, we put you on waivers. Here's 2 tickets for you and your wife to fly back this evening." And went in the change room. My stuff was in a garbage bag and threw it over my shoulder. And you're going after something your whole life, and you just get this door slammed in your face. How did you mentally work your way through that initial door slam? Because for a lot of the listeners out there, they've been going for something their whole life as well, and maybe they've had a door slammed in their face. So, how did you mentally work your way through that? And what advice would you have for any of the listeners that are going through something similar?
So it's funny you say that. A lot of people learn that over time. I have a very distinctive moment where I remember that clicking in my head. I was dating a girl at the time whose father was a very large developer in the commercial space. And I remember he sat me down one day at lunch and he said to me, he goes, "Jack, what if snowboarding doesn't work? What are you going to do after?"
Hmm.
And I remember this is right before I broke my back. I remember thinking in my head, I go, "What do you mean snowboarding doesn't work out?" And then at that moment, it clicked, and I had never ever thought about what after snowboarding looked like. And from that moment on, I started to put the pieces together of say, okay, if this doesn't work out in the lifestyle I want to live in, the things I want to provide for my family, what adjustments do I need to make for myself going forward? And I've always been, I'd say, relatively well in focusing on preparing for the future. And at that moment, I kind of realized, I got to put some things in place that allow for a so-called smoother transition than just ripping the band-aid off.
That's that conversation. It's so interesting. You said it was like kind of something clicked in you. The For me, it was like I was looking for another team for about a month or so, and then Joanna's like, you don't have, my wife, newlywed, she's like, you don't have to keep playing hockey if you don't want it. And it was like this light bulb, like the the blinders just dropped off, and I was like, yeah, I don't want to do that. I want to get into real estate. And then that's kind of what started the journey. But it's such a great piece of advice to, and for you, and with my story as well, is to get around really great people that can throw out ideas and to encourage you, I think, through that. And for you, it was a conversation with somebody that was maybe further down the line, and they wanted what was best for you as well. Uh, so getting around really solid people, it sounds like that's what the catalyst was for you. Somebody that was, we'll say, thinking bigger picture.
Absolutely. And I think that's a powerful message to carry forward, whether it's in business and real estate, whatever, right? Like having someone that can come in and look at a 5,000 overview of your life, your business, your deal, whatever you're looking at, that's impartial towards the outcome and has no kind of skin in the game. I always find is very helpful because sometimes they can see things that you can't when you're too deep in it.
You started really young, so you get out of you're going for the Olympics, you break your back, you're like, okay, I gotta go after something else right now. You worked your way through that, and you started something. You're really young, you're starting to raise capital, like you were your early 20s. What challenges did you have when you started, you open your own business at that point, and you're super young? I remember I started real estate when I was like 23, and for me it was just like, I was young going around, I was newly married, and thankfully I didn't have too much of a baby face at that point. But I mean, for yourself there, I'm curious, what challenges did you have to overcome being so young, starting a business, and you were raising capital as well, which is scary for a lot of people, right? Taking capital from somebody else. So
Absolutely.
you were very advanced for being so young. What were some of the challenges you had to face there?
So first challenge is the obvious one, right? Like essentially I had a very unique schooling, going through high school and stuff like that. And then I didn't transition right away to post-secondary. So I didn't have kind of a base fundamental of business and all these other things other than a general intuition. And I ran into a lot of different problems, but the one thing I was always able to do was insulate myself with people who did have the experience. Um, and I remember just going to do some of these investor pitches and some of the ways that I would, pitch our cap table or pitch like the future vision of the business and things like that just seems so amateur now in reflection. But the reality is people were open to it and willing to give the time. They just weren't necessarily willing to write the check. And capital markets, especially private ones for tech companies, 10, 15 years ago were far less developed than they are now in Canada.
So surrounding yourself with great people, that was something, and just taking action. Eventually you figured it out, and you had wise counsel, it sounds like. But was it just like number of reps you started figuring it out? Because for a lot of listeners, it's that first beginning step is like once you get going, it's like they start to see momentum. But what was it that said, okay, I'm going to like move forward? Was there like a catalyst that, or was it just putting food on the table for you to take that first step forward, and to make sure that you're around people that are giving you wise counsel? That beginning stimulus, what was that for you?
Yeah, when you're starting out and it's your idea, right? The first thing you need to do is you got to sell the first round of people to believe in the idea with you, right? So you need to believe in the product more than anybody else. And I remember the first initial way that I had pitched the product was actually that these were going to go into every McDonald's all across North America. We were going to get this meeting, and I was running forecasting numbers that, if every McDonald's bought 20 of them, this much revenue was going to make X, Y, Z millions of dollars. And the reality is, of course, that never happened. Um, but it's about thinking about the bigger picture vision and selling that dream to other people, right? And once they can believe in you and the dream, then they're willing to kind of take the ride with you. But if you don't believe in your own dream, no one else is going to take the ride with you, right?
And that is right there. If you want to improve in sales immediately without spending a lot of time, just start selling something that you really you really believe in. And most people out there, they're in a sales job, but they would never buy their own product. Or maybe we'll just say they're a realtor. We can talk to that. And they think that if somebody else listed with somebody else, they're going to get better service, and they know they're not going to do a good job. So the best thing that they could do, say, as a realtor, is improve the services that they're doing. And by improving the services, they're going to get the reinforcement that they're a better option for, the potential client. So I think that that's like 50%, I believe, of success is believing in what it is you're selling. So that's such a great tip. And everybody can resonate and relate to the fact that if you have a movie that you truly love, or a coffee shop or a restaurant, right? Everybody becomes the best salesperson in the world for that thing, right? And so that's where I think that, that piece of advice, if somebody actually implements that, whatever business they get into, I think that is such wise counsel there.
Yeah, you know what? It's hard, right? Because when things go bad, it's really hard to believe in the product yourself and all the rest of it. But you just got to keep pushing forward. And I guess those are some of the early kind of leadership characteristics that I started to develop at a young age, which really helped. But to go back to your original question, like there was barriers all over the place, raising capital, people not taking it seriously, people not believing in the vision. And I even, had a lot of growing pains too, right? Like my first reiteration of the product that we had sent out to 50 or 60 clients, it was a piece of crap. And it was really hard when the feedback came back that we had built a bad product. And I was just so, excited that we had actually built it. But the quality control and product testing and things like that did not come to fruition the way we had thought. And that was a big learning lesson that, it can take a very short period of time to burn your reputation and lose momentum, with the client base and business.
No, that hitting a wall now. Let's talk about that. So you're hitting a wall. Maybe the product doesn't come back exactly what you had thought. What suggestions or recommendations would you have for the listeners to continue to keep going and push through? So you took feedback, which was great. So you review the feedback. It's not what you thought it was. Like what do you do to overcome and take that next step? Because that's real feedback to say, hey, listen, it's not you, it's not personal, it's just your approach is not right. So you hit a barrier. So I think this is what gets most people out of the business is they say, okay, barrier, that's it. I'm just not cut out for this, but it's the approach. So what advice or what did you do at that point to be able to, navigate and basically go back at her, with a different approach?
Yeah, so I always like to believe in the term the double down, right? I'm a big kind of double down person in those situations. So like to kind of give my head a shake and then figure out a better approach to do it and consult with some other people and go at it. And, it's funny because if I skip that exact same situation, I had almost a worse situation happen 3 years down the road where, at that point I had just raised under $1 million Canadian for the company, where my competitor had raised about $10 million in the US, which is very typical. Um, and I remember getting a call one day from my manufacturer in China, and he basically said, Jack, I just want to let you know that I'm going to be ripping you off and copying your product. There's not really anything you can do about it, but I want to give you the first right of refusal to be the North American distributor for it. And I remember getting that call and just being absolutely crushed. We had spent hundreds of thousands of dollars on molds and printed circuit board
Right.
facility and all this kind of stuff. And once again, bringing good people around you, we had a board meeting, and one of the board members said, he said, why don't we just get a piece of the product and then see what the landed cost is? And they were able to actually build a better product quicker, that we could get landed cheaper without having to do assembly. So it ended up being a blessing in disguise, but also transitioned the business into a whole different kind of business where we were bridging Canadian relationships with this fantastic manufacturing partner that we had in Guangzhou. And that ended up transitioning 50% of the revenue to a whole different direction.
So how did curious for the listeners, like how did everything turn out at that point before getting into real estate? Did you continue to move forward with that competitor, like with that competitor? Did you were you able to overshoot them, or how did that end up playing out between you and the competitor?
Yeah, great question. So we basically ceased all of our own manufacturing, which was super expensive and very hard to scale in Canada. And we ended up diverting funds to basically more of an e-commerce business. And at that time, I ended up taking my third round of investment from a small, call it angel investment group of guys that had all gone to Cornell together. And they had a really smart idea where they took 5 or 6 different sellable businesses and they put us in one 15,000 square foot facility. And we had shared accounting, shared picking and packing, shared AR and AP and different things like that. So we got to run as a much larger business than we were, with that shared expense under one roof. And then we were able to have fantastic guidance and mentorship in office every day. And over time, we streamlined about 80% of the business within that ecosystem that they had created. And then when the time had come with the business after about 4 or 5 years to either raise a significant amount of money, or to kind of move on, for me, it was time to sell my shares to them and move on because the business was never going to be kind of the size of business that I wanted. And it was, even though it was very entrepreneurial, it was a 7 day, 24-hour a week business, which was great. But the inherent equity that I was looking to grow was just going to take too long down the road with the US competitors growing so quickly.
Got it. So Jack, you had mentioned selling the vision, believing in the product. Was there any other key nuggets that you learned through the years that have helped, whether they're investors coming in, investing in your deal, or any customer service insight to be able to help people take that next step and, to build that trust and come across the bridge, so to speak, to saying, yes, I will take one of them and, commit to it at the end of the day. Were there any other key nuggets that you've learned through the years that helped you?
Yeah, people are inherently lazy, right? So preemptively create value for them before you meet that customer. And it kind of goes to what we were talking about before in real estate, how we try to find deals and things like that for our client base ahead of time. But it was the same thing back there where we were trying to present the case to maybe a solution or a problem they didn't even know they had yet. So it was about the forward thinking of how to put myself in their shoes and then be able to create a scenario for them that they could understand it, very articulate and clearly.
Putting yourself in the customer's shoes, I think, is so powerful. Getting clear what it is that they want, powerful. Figuring out the problem or challenge that's standing in their way, showing empathy, and then you have the solution for them, or that we call it like the proven path to be able to offer to them. If you can take them through those steps, but it starts with putting yourself in their shoes and truly seeing things from their perspective as well. That's gold, and I think that applies. I mean, for all sales. And the one of the best books, Jack. I'm not sure if you've read it, but How to Win Friends and Influence People.
Yeah.
Uh, yeah, I mean, it's one of those classic books, right? So we talk a lot about that. And primarily the main message there is just putting yourself in the other person's shoes, right? And seeing things from their perspective. All right. So let's transition now into real estate and the advice that you would have for any of the listeners out there that said, you know what, I did well maybe on their own principal residence. So they own their home and they're looking to invest into real estate. What advice would you have for, say, a brand new real estate investor to be able to take a step forward in today's market?
The number one thing I would say is breaking a misconception, right? So the majority of people look at the market, they hear negative sentiment right now, and they say, that time came, people who did it, you can't do it anymore. And my argument to that is in the past 15 years, there's never been more opportunity to get your foot in the door now. Because typically when you have, low interest rates, you have high purchase prices, and then it switches. We're at a weird point, very similar to kind of 2007, 2008, where we have relatively low historical interest rates and we also have low purchase prices. And that makes for a perfect storm in getting your foot in the residential real estate game. And even if you don't have the skill set or the confidence to do it, once again, if you get someone, a realtor, mortgage broker, different kind of people like that around you that do have that skill set, inherently part of the value that they're projecting on you is doing that work for you. um, and I would say just start, right? The biggest barrier people have to real estate is they can just never pull the band-aid and actually start.
That's really good. So, I mean, you focus primarily on 5 to 50 unit portfolios that you'll go and you have relationships both with the selling side and then you have your investor list as well. So, where do you see the major opportunities out there in, so you focus primarily in the Ontario market, right? And so where do you see that right now? Do you see it more on the higher unit count? Are you seeing more in kind of the smaller potential duplexes? I know it's, you'll still go there, but generally it's the 5 to 50 that you'll focus on. But is there a certain unit count or type of real estate investment that you're coaching your clients and any potential investors to get into in today's market?
Yeah, there's short answers to this. There's great opportunity on both sides of the coin. I always say to people who are looking to scale a real estate portfolio, it depends what operational experience they have. So if it's someone who, let's say, make, you know, mid to large income, I always recommend them start off building a residential portfolio to get some operational experience, and then maybe going to what we call commercial multifamily, which is essentially 5 units and more. Um, so you can find it in a lot of areas around the GTA, numbers that are starting to work really well again. You can find renovated properties, let's say a triplex, for example, in the $700,000 to $800,000 range, that's fully renovated, fully vacant, and you're typically buying that construction done on the property at 80 cents on the dollar. And for the viewers who, want a better explanation of that, when I calculate things like return on headache on an investment of actually buying a rundown property and spending a year, doing a 3 unit turnover, if I can go buy that vacant property from someone who just incurred that headache and buy it for less than what they spent, that's great because I can just get tenants in there, stabilize the asset, move on to the next. So ton of opportunity on the residential side if you have someone that you can work with that, can handhold you and underwrite through those opportunities. On
That's
the bigger
great.
stuff that, yeah, it's a very interesting time right now. On the bigger side, we found a really cool gap in the market. So a lot of institutional investors are divesting of sub 50 unit buildings in their portfolios, and they're trying to stick to the larger products because they get more compression on their, profit per door. So what we've done is we've brought a lot of these institutional grade assets, 5 to 50 unit apartment buildings, and we've matched them up with either higher net worth individuals, or small syndications, groups, 2, 3, 4 guys that want to go and take down these buildings and get really attractive financing through CMHC.
Yeah, CMHC, that program. I mean, it's phenomenal. Uh, how are you structuring the property management? So with us, we find generally like there's certain economies of scale, right? You get over a certain unit count that there's you can get full-time property management. So between say that 5 to 50 unit count, how are you structuring the property management and are you buying them close to each other, or if there's a one-off, does that make sense to have full-time? Maybe you could talk a little bit about the property management and then how involved are your high net worth investors actually with these properties?
Yeah, great question. So for my own portfolio, I have properties in Hamilton, Mississauga, Brantford, Barrie, Owen Sound, Collingwood, Kitchener. So I'm pretty spread out all over the place. I have a full-time employee that's dedicated just towards managing those assets and property managing it. Um, we do find and help put in professional management for other tenants that don't have their own infrastructure set up so that we can have somewhat of a smooth transition. But there's no real easy way around it. If you have less than a couple hundred units and you're dealing with third-party property management, they all have their own inherent quirks and issues, and it is relatively there's a hands-on component to it. So whoever said that real estate is completely passive just doesn't own enough of it because at some point, it does become more of a job than it is just a side passion.
Yeah, no, for sure. And finding the right property managers, yeah, I mean, it's massive. We found in our assets down in Charleston and in Florida, Tampa area, we we found that how friendly that property manager is that's actually dealing with the tenants themselves is like one of the biggest indicators if that community is going to do really well. So what we've actually done now with our property management companies, the third party that we work with, is we're actually doing the final interview with whoever's going to be managing the assets now. And then we actually have kind of a training program.
Yep.
Well, we do have a training program to actually train them up, but you got to really, I mean, that's because we're into the larger unit portfolio there, but I think making sure that you have the right property management and knowing who's actually going to be communicating with the residents when they're selecting that property management company, that is like that's massive. I just spoke with an investor and they so not in Ontario, they were buying out east, and they hired a property management company, and it was they were just gathering units, but they weren't doing anything, and then they were overcharging with the renovations as well. So what advice would you have on selecting the right property managers, and kind of, there's certain questions that you'd ask and to be able to say, hey, listen, these guys are really good? Or do you already have a Rolodex of property managers that you've already vetted for your investors where they don't need to go through that?
Yeah, we do have a select list of people we like working with, but I would say there's one important piece that comes down to a property manager. The everything else that they do is essentially standardized. It's how do they communicate and how often do they communicate? Um, the biggest driving factor towards negative tenant experiences, other than, leaks and whatever small things like that, is lack of communication and not feeling heard. And what happens is a lot of these property management companies, the amount of doors per employee get to a point where they can't properly service that building anymore. And the tenant touch points just end up going by the wayside, and, garbage ends up piling up, or you have tenant disputes and things like that. And, a lot of the time we find the profitability of that asset starts decreasing. And that's another reason too why a lot of these larger REITs and things like that are divesting of these sub 50 units is because they can't operate them efficiently.
Yeah, no, that makes a lot of sense. It's interesting. We have a portfolio in Ontario and down south, and it's really interesting on kind of the approach because with you have rent control there, so it's like what 2.5% you're allowed to
Yes.
raise this year. Down in these markets that we're buying in, there's no rent control. So what we've done is we've actually, and I totally agree with the communication. That's massive, not being, not feeling heard. And we walk around to the different competitors and we see the property managers that are there, and you could tell the communication is not very strong. But one thing that we do is we offer these 3 guarantees to our residents in our communities. We say that if you move in and within 30 days you're not happy, you can cancel the lease. If you lose your job, you can cancel the lease or you need to move. And the other one is a 48-hour maintenance request that if we don't fix it within 48 hours, they get a concession. And so what that does is holds our property manager very accountable to making sure that they do it, because otherwise it's going to be the canary for us on the asset management side. But that would not work as well, from my experience in Ontario, because for example, we have one tenant that is there's 7 other tenants paying $1,000 more than this one tenant, and we can only raise 2.5% to get them up. So the customer service side, I'm not as incentivized on the Canadian side to give like wow customer service because the rents will you can only lift it so much, so to
Of
speak.
course. Yep.
But in these markets down south, it's like the market will dictate value, and we can deliver over deliver on that customer service. So that it's kind of interesting, the two different approaches. It's like rent control seems like it's like a very good thing for tenants, but it also restricts the landlord on how much they're going to spend with amenities and upgrades and fixing things quickly.
You hit the nail on the head there, right? That's really a downside to it, and obviously in Ontario, it's getting worse and worse in regards to landlord kind of restrictions on that. Obviously still doing it, and a lot of people are, so it's still profitable. But the reality is this, right? Someone who's lived in a unit a very long time, um, they want that unit turned over, renovated, made look really nice, which most landlords are happy to do. But obviously there needs to be some sort of financial, increase on the other side that's significant enough to justify the renovation. But there's change happening in Ontario, and some of the things are good and some are bad, right? Like one thing we've noticed in our portfolios and our client base, cash for keys is temporarily dead in Ontario right now, which a lot of people would be surprised. People are getting too educated to the point where they're starting to ask for egregious sums that can't be justified anymore by the landlord.
Yeah, I just pause you there because I totally relate. And the quick story, the best is that we've offered 30,000 cash for keys, and they've come back and the number they were asking, you might be able to beat this, is at the 100,000. He said not $1 less than 100,000 to move out. But I just wanted to fill that in because that totally makes sense how it's dead now, because a lot of tenants they've been talking, right, and they're educated on that. You're going to potentially pay more.
So it's actually interesting because of this exact problem, we've noticed that the whole direction of the market's changed. When we had low yields and interest rates, the primarily majority of our clients were, burring or doing value add apartment buildings. So they'd buy it on bridge financing. They'd churn and burn tenants, so obviously pay tenants to move out so they could build a better community and renovate the assets and then bring it into CMHC to get that really good cheap debt, long-term financing. Two problems with that. A lot of these people went in and they got that bridge debt that was either floating, or it was at risk of the bond and the yields, right? And they got kind of topped over when their payments doubled and tripled, and they went from paying
Yeah.
20 grand a month for this asset to 60 grand a month. And then the other part was that, yeah, the tenant advocacy groups took it to such an extreme point where what the tenants are asking for, that it just kind of locked up the entire market from that perspective. So what we've seen the majority of people doing is changing the path to buying higher levered assets that can be taken right into CMHC on longer term closing, so 5 or 6 months. The majority of people in Ontario specifically are trying to get the 50 points for energy efficiency through MLI, and then just getting a really good, amortization and debt to service ratio and all that kind of stuff, and just bringing good assets into long term financing. But the quick last point I'll make on that is if you're negotiating with the tenant for cash for keys and they decide to be super aggressive with what they're asking, you're going to be locking into a 5 or 10 year mortgage. So there's no point in necessarily opening up that conversation for 5 or 10 years. And a lot of the tenants, when you tell them that, you'd think that, you know what, if I'm not going to see any money for 10 years, I'll just take it. They still don't. They double down.
So you're seeing newer vintage being purchased right now, or are you seeing that just matter the higher leverage, regardless whatever the year that it's built, or are you finding like they flee to higher, we'll say, quality, newer vintage properties at this point?
Exactly. So more stabilized assets, higher average rent rolls, well-maintained buildings. No one wants to buy junk right now. There's good assets trading at very fair cap rates. And if you can buy that asset at 15% down and lever up relatively heavy, put it right into CMHC and go start focusing on a next asset. It's the play that makes the most sense right now. We're seeing that both on the smaller investor side and the institutional side.
Yeah, that makes a lot of sense at this point. I mean, going to 40-year AMs right now, and with CMHC, it makes a lot of sense from a cash flow standpoint, and you can lock in your rate too. Um, so question there is in regards to the future. Where are you seeing? Because we've seen a lot of purpose built rentals. That, I mean, it made a lot of sense. There's a lot of money that's gone into that over the last couple of years. You're seeing the amount of deliveries hitting the market start to really increase and focusing on the rental side. Where do you see this going, and where's the is the opportunity still the higher leverage? We're gonna in 5, 10 years we're gonna see some steady increase, um, or like is that just a matter of I'm gonna wait and the market's gonna come down, or is it a matter of like get in today because we're buying at massive discounts?
I guess it depends on your approach. Both work well, but the elephant in the room that some people talk about and some don't is that rents are still technically declining in the majority of, we call it GTA plus 3 hours areas. And with that being said, if you're looking at your underwriting over a 5-year horizon for your LP partners or for yourself, the tightened up underwriting needs to be a lot more tightened up than probably before, where people thought, you're going to be getting 2.5% every year and it's going to keep compounding from there. And even though immigration's still pumping pretty heavy on the permanent residence side, the short-term residents really drive the rental market.
Mm-hmm. Yeah, that makes sense. It's interesting right now. We're seeing on the residential side that number of deliveries hitting the market. A lot of developers they put pause on their building and single family properties. I know you had suggested starting there for any new investor. It's an interesting space to be able to get in. One of the big challenges now is to be able to buy it, and then if you can buy it, and you're going to likely be having to feed the deal. You're not able to charge enough rent to be able to cover everything. But from an upside appreciation standpoint, I believe there's a pretty strong case for strong price growth moving forward, just because there hasn't been a lot of focus on that. It's more the money seems to be going into the multi-unit, the purpose-built rental space there as well. Are you seeing something similar on your side?
We are seeing people start to look at that side. We're always cautious on giving them the advice to do so, and I'll tell you the reason why. The majority of our clients who come to us are people looking to scale and own multiple assets as opposed to just one or two. And when you buy a property that's what we would call negative debt service, so essentially losing 500,000, 1,500 a month, it really hinders your ability to go to a bank and get your second, third, or fourth and fifth property. So one of the things that we always try to instill in our students and our clients is that the bare minimum we want for our properties now is to at least break even at a relatively stress test rate. Call it a 5.5 or 6%. And if the property breaks even at that with the current rents and purchase price, we're okay with that because at least you're getting the mortgage pay down. You're not having to fork out capital every month to support the asset. And you're really going to ride that wave up eventually of the, 30 to 35% decrease that we've seen in a lot of markets.
Right on. So, what areas are you looking at right now across Ontario? Are there certain areas that stick out more to be able to do something like that, or any assets? Are there certain areas that stand out more than others?
Great question. So if you think about how Toronto and the GTA was developed, from Hamilton to Niagara Falls all the way down to Toronto, the West End developed much earlier than the East End and the north of Toronto. So the majority of purpose-built multifamily over the past 100 years is on the west side of the GTA. However, there is some pretty good opportunity opening up in cities like Barrie, Aurelia, Hamilton's got, some pretty great deals right now. Brantford is a market that I like really well. And then honestly, even Toronto, like the price per door is getting to the point where it makes sense to pick up great assets in great areas in Toronto. And that's even to a smaller scale of the duplexes and triplexes.
That's great. Okay, well, let's talk a little bit about this blue ocean strategy that you're. I mean, it's genius what you're doing right now. You're taking a need in regards to having assets that are sitting on the market, and you're packaging it. You're creating a whole step by step program for investors that you're making that offer for. Can you talk a little bit about how you guys came up with the idea, and then what that looks like, to be able to create a potential deal that otherwise would never have come together?
Yeah, so Mike Rockall, who I work with on the broker and apartment building side has been kind of a great resource in helping us scale up the business. And what we like to do is we like to say we, give a white glove service to our clients. So from the concept and idea of an investment all the way to closing on it, stabilizing it, we'll handhold you through the entire process. And what we found that was there was a lot of investors sitting on the sidelines ready to deploy capital, but they weren't seeing the opportunities listed at prices and cap rates that made sense for them. So what we've done is we've proactively gone out to different off market and off market on market listings, and we get the deal to the point where it's negotiated, where we know that it is a good deal. We've done a relative number of due diligence on it. We package up the opportunity and then put it on a silver platter to our client base, and then give them that opportunity basically as a lukewarm lead, that they can jump in and kind of take over. And it's been really powerful because we've been able to come with some fantastic deals that we personally never thought we'd even get that low. And our investors are super happy because they can focus on their day jobs doing whatever they're doing. And they know we have their back by hand holding them through the entire process and bringing the deal on a silver platter.
Yeah, it's genius because most of your investors are high net worth, they're running businesses, and they like the idea of real estate. It's just they're not a pro like you, right? To be able to, structure the deal and then pre-negotiate, and they don't have the time as well. So if you can actually say, here are the projected returns, here are all the connections that you need. We just need to, follow me over the bridge, so to speak. I think that is something that is more needed today than ever. I mean, it's something that it's the same with us in our deals. We go and negotiate the deal and we package it up and we basically make it so it's very, we'll say, yeah, very easy button like. But that's where what you're doing is, well, you're taking deals that aren't even accepted and you're pre-negotiating them and you're packaging it up to give them more options there as well. So I just think it's brilliant, and it's something that most commercial brokers are definitely not doing. And the cool thing that you have is you have experience personally investing, and you're a commercial broker as well, and you're a coach. I think the three of them together, I think you've built some really great synergy to be able to help your clients. I think it's smart.
Yeah, that's really where I kind of got the structure and the base from with that business, right? So I was a real estate investor for 8 years, on my own, building my own portfolio, and then decided to add the component of the realtor side of the business. And with that, the inherent credibility was there, and the ability for me to look at a deal as an investor and being one, I think gained a lot of respect with the client base. But building off one thing that you talked about, we have probably 50% of our clients that are buying 5 units and up are sophisticated investors, and the other 50% are just average people. It could be a couple, middle-aged guys that just want to get together with their friends. Each one of them has, $250,000. They put 750K together, and we're getting them in, almost a $5 million asset. And when you look at the power of syndicating and doing some of these deals with your friends now and getting these really good generational changing deals right now, it's amazing. And I'll give you a direct example. We have three clients of ours who have owned an auto body shop for the past 20, 30 years, in real estate, but not highly sophisticated. And they were looking to get an asset that they can basically pass down to their family and would produce great cash flow for kind of the next generation, all the rest of it. And we're able to get them in a $10 million asset, 40 units in Kitchener that came from an institutional seller, get them amazing financing through CMHC MLI Select program, and get them in with about $1.5 million. And when you look at the total return, because of the amount of leverage we're pushing and the quality of the asset, we're averaging basically a 25% annualized return on it.
Yeah, no, it's really smart, and I think you're serving a need, not only on the buyer side, investor side, finding these deals, but on the seller side as well, because there are a lot of assets out, and these assets aren't as sexy as they were back a few years ago when real estate was, going through the roof. But now you're finding them at discounted pricing, and you're able to help these sellers move these assets, and you're connecting the dots in a very, we'll say, easy button way, which I think is genius. So thanks for sharing that story. I think it helps connect the dots really well for the listeners. What investing advice would you have for the listeners, real estate investing advice? If there's something out there, they're like, you know what, this is a key nugget that has been learned sometimes the hard way, sometimes the proactive way, because you've told your clients this. But are there any key pieces of advice that you give for real estate investors that are listening today?
Yeah, I would say educate yourself to be able to do it on your own. So obviously have professionals around you that you trust that can do it, but be able to educate yourself so you know the talk of what they're talking about to be able to have a check and a boundary on it. The other thing I would say is this, you don't need to grow a portfolio of 20 properties, 100 units, 100 million in real estate. For the average person, if you just get two rental properties and you look at a compounding calculator of what that does for you in retirement, you're going to end up two or three times better than the average person in Canada in retirement. Um, so I would say that. And I think the first thing, honestly, is just being able to push yourself through the last 10% of the deal. I remember my first five properties that I bought, the last 10%, what I call the gut feeling push. Is this the right deal? Am I making a
Yeah.
mistake? Do the numbers work? A lot of investors can never push themselves past that and never actually get into the deal. And at some point, you just got to take a little bit of risk. And the reality is this, time heals everything in real estate, which is a beautiful thing. You might just have to, have your asset a little bit longer.
Hmm. Yeah. I think that fear of making a mistake, that fear of failure, that makes a lot of sense. That last 10% to be able to push through. It reminds me a little bit of the very first asset that we were looking. So this is a house that I had actually listed back a number of years ago, and I brought Joanna in. I'm like, this would be a really great investment property, and we went to the lower level, and we smelt a little something in the lower level. It was a little bit of mustiness or whatnot. And I listed it, and we actually sold it at a really good price. I'm like, I, you get that. I should have done it. And and then what happened? There was another deal that came up, and I saw it. I liked it. I'm like, I'm gonna do it. I'm gonna. I did the numbers, of course, and I just came home that day, and I told Joanna, I'm like, we just bought a house. She's like, what? You bought a house? And now I wouldn't recommend to do that always, but I think it's like taking that action. For me, what happened is over the years, Joanna started seeing that we were doing well with the purchases. So, you might take a little heat on the first one, but taking action is something that's important. But I'm going to add, I think it's so important that when you do have that you have wise counsel with you that have learned the lessons. And that's where somebody like you, Jack, comes in, really strong commercial broker. You can come on as a coach there as well to be able to make those wise decisions because, as you get up into the larger deals as well, the one mistake, it can cost you a lot, but if you have the right counsel all the way around, they can really save you a lot and mitigate the downside in real estate. I think, ultimately, if you can find deals that at least carry themselves, we like to find deals that cash flow. You keep adequate cash reserves, so oxygen in the tank. And if you can fix your debt, if you take those off and then you have good operations, I mean, your downside in these types of deals is very, very low. Where most operators, and you can add to this as well, is from my experience that I've seen, most operators got caught because they had adjustable or variable rate mortgages, interest rates doubled, their debt payments doubled, and they just can't carry them anymore, and they ran out of oxygen or cash, right? So if you can have reserves and you can lock in long-term debt, and if you can cash flow the deals, I mean, I don't know. I think it's a relatively very safe, low volatility if you can just hold those long term. What's your take on that, Jack?
Absolutely. So I always like to compare and tell people, with stocks and stuff, right? Like take Apple, for example. I buy some Apple shares. I can't tell Tim Cook for having a bad quarter to go pump out a new product or more iPhones to improve my investment. But me as an operator, I can go and do several different things in my asset to actually improve the investment quality of it and make the returns better. And I think a lot of people during the past, 36 months when we had the market correction, had to take a step back and look in their internal portfolio and say, how can I improve this to perform better as opposed to just buying more? And for me, I've always thought real estate's a relatively simple, hands-on business like that, where you can actually affect change in the outcome of your investment. So I could not agree more with you.
Yeah, no, that's so good. And before I move on to the rapid fire here, I just want to underline something that you said, which I think is really smart. If you just get one or two extra properties, one or two extra investments into real estate, it can change the game. Interesting stat is that the average net worth of a homeowner that owns real estate is 210,000. The average net worth of somebody that's renting is 6,000. So if you just do one
Wow.
more investment, it it can change your life. And you had said it well, one or two extra can two or three X where you're going to be down the road. And I think taking that action in that last 10% that you gave, I like that because when investors are close, they're going to remember this conversation, I hope, and say, okay, you know what? I got to push through that last 10% and actually sign on the line to take that step. Because I think that today, in today's market, is one of the best times to buy real estate. It's not in the news, right? That's why it helps to have a really good, advisor, somebody that is counseling you to be able to take those steps and, encourage you to take that next step there. So,
Yeah, that's one part we always talk about on the coaching side, right? Is something I like to call time compression. So if you are looking to do it, you want to get your foot in the door, but you might not necessarily know what to do or have those kind of hesitations we were talking about. When you invest in coaching or mentorship of any kind, you can compress what might take you 3 to 4 years to learn on your own down in 1 year. And then when you start doing that for a couple of years, you've compressed 10 years of knowledge down into maybe two or three. And the inherent confidence that you gain with being able to do things like that allows you to pull the trigger faster, quicker, and inherently creates more opportunity because things just start coming to you. Um, but anybody can do it. That's the beautiful thing about real estate. Anybody can do it.
yeah, no, that's great counsel. All right, here we go. We got three questions here, Jack, and then we're going to wrap up the conversation. It's been great so far. You ready?
Let's do it. Yeah.
All right. First one is I'm a big reader, love reading books. I'm curious, what is the book that's made the biggest impact in your career?
Yeah, so it's a book by a guy named Sam Zell. It's called "Am I Being Too Subtle?" It's really cool. It's a billionaire of a guy, started from nothing, super poor family, started buying single family homes in New York and grew it to a $40 billion portfolio that he sold in the fall of 2007, right before the financial crisis. Reading, um, the writing on the wall, and just a really good, inspiring story all around of being able to believe in yourself and start at the bottom and work your way up.
Oh, that's pretty phenomenal foresight that he sold right before the. That's
Yes.
hard to do. Like, if you're winning, like it's like just imagine you go to the casino, and I'm not a big gambler, but you get up, like the ability to take money off the table at that point when it's going up so far. I mean, his foresight. I mean, that's a very interesting book to read just to figure out what actually made him pull the trigger on that.
Highly, highly recommend it.
Yeah. Any advice for taking money off the table when the market's really really hot? Not many people can do that, but after reading the book, is there anything that would say, hey, listen, this is a good time to sell when the market is going up really strong?
Yeah, I got a good point that kind of hits on that I think actually helped me. I sold some assets kind of peak of the market because um, I cared about the economic indicators outside of real estate. So I find there's a bubble of real estate that people focus on, stats, the market, this, that, whatever, but they don't look at inherently a lot of the other economic factors that if they're not performing well, it's a trail that real estate's not going to do well. So different things like educating yourself on, bond yields and inverted yield curves and things like that, and being able to um, act accordingly ahead of time before the change is going to come.
Yeah, no, that's where that research comes in, and having strong advisors and counsel. That's really important. I know for us when we're going after these assets, we're looking at, okay, how many people are moving. I mean, the basics, but you're even taking it a step further in regards to the financial indicators there as well. So I think that's it could tell you the story before that it's up on the headlines at CBC News saying that the market is now starting to drop at that point, right? So if you can figure those out and get with the right people around you, I think that's gives you a massive advantage. All right. Cool. So we got the book. Second is three words that people that know you best, Jack, how would they describe you in three words?
It's a good one. I would say probably entrepreneurial, um, ambitious, and outgoing. I'd say are probably the three words that would come up the most.
Okay, awesome. And then final question is what final advice would you have for the listeners out there? It could be across the board, Jack, whatever you want to tell the listeners out there to help them be more successful, whether it's, personal or in their business?
I'll leave you with two things. So one came from a mentor, and it's a saying I say to myself almost every single day, and it couldn't be more true in all aspects of business. Revenue solves all problems in business. So if you can figure out the revenue component, all the other operational issues, things like that you have can be solved by that. So that's kind of the one saying I'll leave you with. The second thing is actively seek mentorship in whatever industry that you're in. There's a lot of people who are later stage in whatever career they're in, and they necessarily haven't given back in a knowledge transfer. And I think when people are asked to do that specifically, they're very open to do it. And I find a lot of businessmen and women don't necessarily get that satisfaction from their inherent family because their family's so far in it, but they're happy to do that to people externally because they want to be able to pass that knowledge to more people. So just be open and soliciting mentorship in whatever you do, any aspect, any sport, whatever. Just try to find good people around you that are willing to do that knowledge transfer.
Mm, it's so good. It's like when they give advice, they feel good about it, and it's like they can't outgive the advice, right? So I think that is such great encouragement to actually proactively give, like, ask for it, and they have time for you. I don't know, Jack. Like, the more successful people I find, if you're like totally open and curious, and you're coming with really good questions, I found that, like, it's rare for anybody to say, I'm not gonna, that's just weird for, I'm not gonna tell you advice, I'm not gonna, so I that encouragement is so good. I think a lot of people would be like, oh, they're probably too busy, they don't have time for me, right? But just walking up in confidence and asking, I think that's such great counsel here.
Absolutely. Everybody wants to give back in a way, and it's an easy way for someone who's done well to give back without any monetary transaction.
Yeah, so good. All right, Jax, what's the best way that the listeners can reach out, whether it's, coaching, maybe they want to buy property through you as a commercial broker, or potentially invest in a larger Ontario commercial building?
Yeah, so easiest way, you can find me on Instagram. It's Bernstone Capital, Bernstone Capital. Or you can check out my website, which is www.bernstonecapital.com or www.bernstonerealty.com. So you'll be able to catch me in either of those.
Amazing. Jack, really appreciate you coming on the show. I know you're a busy guy. This was a great conversation.
No, thank you so much. Been looking forward to it for a while.
Right on. Well, thanks for listening, guys. If you like the show, please share and subscribe to the channel, where we're building a community of up and coming entrepreneurs. And if you are looking to invest south of the border, go to fulloutinvesting.com. You can learn a little bit more about our 10-step full out investing process, and there's a sample deal there as well. Just remember, the fastest way to build wealth is to grow your business and invest in real estate. I love you guys.